A very good afternoon to everyone, and thank you very much for joining us. We're very pleased to have you with us today. We are today kicking off the third in a series of webinars that we have been broadcasting since last month, and we want to thank everyone who's been able to join in so far. For those who may have not participated in earlier webinars, is arranged by Centum Capital Partners. Centum Capital Partners is a private equity fund manager under the Centum Investment Group. We have been managing private equity since 1967 when Centum started, so over 50 years. We've been possibly the most active manager of private equity in this region over the last 10 years, with quite a successful track record of investments and exits in that time. I would also just like to point out that for us in our business, we look at several sectors. The topic today is particularly focused on consumer-facing businesses and what the consumer-facing businesses could do in this era of the COVID-19 crisis that has been created by the health pandemic. We have previously been invested in consumer businesses. We are still invested in consumer businesses. We have been invested in beverage, alcoholic and non-alcoholic beverage business. We are still invested in an airline business. We're still invested in a number of other businesses that have consumer-facing aspects to them. So it is a great pleasure for us to be able to host this topic today. It's a live issue for us, and just as it is for you, and we want to thank you once again for being able to join us. We today are going to be covering a number of items. Our key panelist for today is Wambua Kimeu, who I'll be introducing shortly. We will be speaking about how COVID-19 has affected this region, the East African region, and what we see as the outlook for this region. We'll also then cover what is happening to consumers, and then what is happening to businesses and how do businesses respond to the COVID-19. For the presentation today, we will be sharing the presentation that will be made by Wambua to all those who registered on the webinar. We'll also be sharing a recording of the webinar today. I would also like to encourage you to participate with us in this webinar. If you have any questions, comments, you could use the questions or chat function in the webinar, which you'll find on the right-hand corner of the GoToWebinar. And we invite all questions, all comments, and we'll be able to address as many of them as we can in the time that we have allocated. For the panel today, the lead panelist is going to be Wambua Kimeu. Wambua has 15 years operational experience. He has been the CFO of one of the largest Coca-Cola bottling and distributing companies in the region, Almasi Bottlers. He was seconded from Centum to go as CFO to Almasi. Prior to joining Centum Group, he was the managing director of the Tanalek Group in Tanzania, which is a transformer manufacturing business. So he has quite a bit of insight into what is happening in the consumer-facing business, and we look forward to hearing from him. Second panelist is Thomas Omondi. Thomas is our group COO at Centum, and also is a partner with us at Centum Capital Partners. He also has a very strong consumer-facing background. He previously worked with Uchumi Supermarkets and also with Kenya Airways. I'll be a moderator for today. My name is Fred Morini. I'm the managing partner for Centum Capital Partners. So with that introduction, ladies and gentlemen, I would now like to hand over the presentation to Wambua to take us through that. And welcome once again.
Sorry about that. Having a little bit of technological challenges, but we're back. So as I was mentioning, so today I just want to walk you through about how consumer-facing businesses are being impacted, and also basically just to share with you the experience and insights that we've seen both from businesses which we're looking at and also businesses we own, and share a bit of our experience. When you look at the changes that within just when we start looking at the economy, basically, the economy right now, as we're looking at it, a majority of the businesses have been impacted, and this is impacting on the growth that we are expecting on GDP this year. So if you look at Kenya, we're expecting GDP expected of about 1% from 5.6, Uganda also coming down 3.5, and Tanzania to 2, and Rwanda to 3. So basically what's happening around the economy is that a lot of impact is being felt. Currency, the currencies are being impacted. We have debt obligations, which we need to meet, and we're also being impacted on how we can access debt in the international markets, mainly because of the downgrades that most economies are receiving, but also just the appetite for investors in putting money. Quite a lot has also happened across the businesses in terms of consumption and demand having come down. Regionally, what we are seeing is that for Kenya and our regional partners, we do a lot of trade. Kenya does about $670 million of trade with Tanzania, and about 850 with Uganda. And I'm sure you've seen in terms of business, our borders right now have long queues. I think as of yesterday, the queue at the Malaba border was about 35 kilometers, which is quite long, meaning that there's disruption on trade happening across. We are also we can't ignore the politics and the election cycles. So we are expecting about a number of the regional countries to be going into elections. So that's also having may start playing around on the economy probably much later in the year. In terms of the governments have responded positively, so as to mitigate the impact of COVID-19. And basically, I think the governments have taken two views, which is important, and they've had to balance between lives and livelihoods. On the life side, the governments across have instituted restrictions. We have restriction on movement of people and goods as well. But more importantly, from a health side, we're using masks just to make sure that we reduce the number of cases across. In terms of impact on livelihoods, we've seen the Kenya government coming out. It's taken quite a number of tax measures just to make sure that that people at least are not heavily impacted. Reduction of the PAYE, reduction of corporate tax for companies to enable them keep employees, and so we can see quite a bit happening from the government front. On the bilateral side, the government is also working with IMF and the World Bank and bilateral partners. Kenya has received $739 million from IMF for the rapid credit facility. We're receiving another $1 billion from the government, from World Bank, which is going to help us at least mitigate also on our forex, which is which is being impacted as right now most of our inflows are not coming in from tourism, from diaspora remittances have reduced, and our exports. So I think what the government is doing is commendable. Obviously, as we always say, we need to do much more, much quicker. But we are happy with the response the governments have taken. On the consumption and demand front, I think the interesting thing is that we are not doing much in terms of manufacturing at this point. We have the curfews. The Kenyan CEO, of the power businesses are saying the power we are consuming has come down, so that has impacted us. But I think it's important that we just look at some of the one key indicator that has happened much more recently in terms of the business front. So what we're presenting here is just having a look at what the CBK information is showing, and it's showing that a lot of businesses have gone out and restructured their bank facilities. And the biggest, in value terms, trade businesses have restructured about 44.9 billion, manufacturing about 23 billion. So this is just showing you the impact of what COVID has impacted the individual businesses and the various sectors. And what we're seeing is that definitely these circumstances that we are in will and are impacting businesses. I think from a government front and from a policy direction, I think the governments have put in place various measures to impact on in terms of policies that are impacting both the people in terms of lives and also livelihoods, the economy, and try to help businesses stay afloat. So I think in Uganda, all the businesses, we are seeing them start facing in, coming to the conclusion that now we are approaching time to reopen the economies. Uganda is looking at starting to reopen around June. Kenya is also having discussions. I think we have two committees, one that's looking at when to reopen the economy, and we have the other one looking at when to reopen schools. Also Tanzania as well is looking, and as well as Rwanda. Everybody is now coming out, the regional economies are now looking to see when to reopen the economies, which is commendable because, as we said, it's about protecting lives and also protecting livelihoods. So back to what we really wanted to discuss today is back to what we really wanted to discuss today is really look at what's happening to consumers and what's happening to businesses. So in terms of on a business front, on the consumer front, the consumer has been faced with a number of things that have been happening. One, there's restricted movement, reduction in household expenditure, reduction in household incomes. We are now accessing information more from our gadgets. We are on the internet much more. We have to do a lot of social distancing. We are now working from home. So with these things happening and with us being faced with these new circumstances, or what we're calling the new normal, then it has also meant that consumers have changed in their behavior. They've started perceiving things and looking at things very differently. So some of the behavior changes businesses are seeing coming from the consumer are consumers are now shopping more online. They've shifted more to online shopping because they are not able to move out a lot. A lot of home consumption is happening. We have a move to value brands or cheaper brands, mainly because obviously we're looking at it and people, the incomes have been impacted, and people are saying we just want products that are able to meet our needs, and as long as they have the right quality. Consumers have also cut back on non-essentials, and here we can think about things like consumer durables, things like TV sets, durables, furniture. Also, on the other hand, the consumer has also picked up on some of the durables, for example, items that help them work at home better, whether it is a printer, whether it is a good office chair to have at home or a desk so that then we can work. Increased focus on hygiene and wellness. With the sanitization happening, we have to clean our hands all the time. So we are now seeing a lot of consumers focusing on that, wellness. People are buying a lot of exercise equipment, they're keeping in their houses and exercising at home. So these things have really changed how consumers are acting, and that has meant that also businesses have to adapt to make sure they keep up with the changes in consumer behavior. When we look at, when we go now to the businesses really, and ask ourselves the questions, I mean, what should businesses do? What are we seeing businesses happening to them? A lot of consumer businesses have already done quite a number of things. So I think when we're looking at how should businesses respond to this pandemic, really, it's looking and saying there are two things that have to be at the back of their minds. One is survive, and survive during this period, meaning that you're making a lot of tactical decisions to survive. But on the other hand, you also want to prepare for the future and prepare for the future in a way that you're going to be able to adapt. So on the survival side, we are seeing businesses are saying, look, we have to get work done. People have to work from home. Businesses are concerned about liquidity and working capital. Around supply chain, are we getting our raw materials in? Are we able to distribute with the restrictions that we have around movement? How do we get the products to the consumer on the demand fulfillment? How are we, has the route to market been impacted, and are we able to change to do that? We're communicating, and we're also meeting a lot of the regulatory changes that are happening. We're saying we now have to wear masks, people have to stand, social distancing has come into place. But I think for us, the key thing that we're seeing, and we've seen it in businesses, is in as much as everybody is looking and saying we've got to react now, but on the same hand, we've also got to look and say what we are doing now will impact the future, and we've also got to, as we make decisions now, prepare for the future when demand also picks up, and we come out of this current circumstances. So for us, we see these two being parallel processes, so that every decision any business is making now is also being you have an eye out on the future, asking, yes, we're making a decision about our liquidity, we're making a decision about our supply chain, how does it impact the future? We've structured our discussion around three areas mainly. One, which is the demand, which is really demand, sales, and revenue. We'll then look at the supply chain, which is the logistics, the manufacturing, and distribution. And then we'll also have a look at what's happening on cash, which is a big thing, and I think is everybody's concern at this point in time. So when we look at from a demand sales perspective, businesses have seen a significant drop in demand, and that has meant also a quick drop in revenue. So what we're seeing businesses doing is first and foremost saying, let's just make sure that our products are available. Let's avail the product to the market. Let's make sure we are on the shelves. Let's make sure we are at the retail, at the trade, at the distributor, just so that then the consumer is able to find the product. So with the challenge of drop in revenue, then businesses also have now to make sure that they don't lose a sale just because they're not available. Businesses are also having to now come up with promotions and discounts and just to push volume, just to be able to make the sales and create demand for the products. So in terms of that, what businesses are now doing is going more online, a lot of online advertising, a lot of online marketing, but also businesses, and especially those in the FMCG, where they have a lot of staff in the trade, and they've had to look at their staff and say, we have social distancing now, what do we need to do? So businesses are now reacting by saying, look, let's look at our targets. Let's look at where do we want to target also in terms of the retailers in the supermarket. So if you see in the supermarkets, we now have much more merchandisers helping businesses push sales at that level. So they're there to be able to converse and agree, and convince the consumers, please have a thought and have a look at our products. This is still in line with the social distancing and all that. Consumer preferences have changed for the customers, and what businesses, we are seeing businesses now doing is they've had to now relook at their brand preferences. They have to look at the brand and say, can we now push more of the value products rather than the premium? Because as we said earlier, we are seeing consumers being very cost conscious and price conscious. Consumers are now focusing a lot on home essentials, foodstuffs, items that we are using at home, dishwashing liquid, washing liquid, whether it is all the items basically that we need for the home, and they're not focusing more on home essentials basically. So also businesses that are manufacturing home essentials are now also pushing hard and just to try and get that going. And on the other side, those that are non-home essentials also seeing how to adapt for the consumer durables, either by giving huge discounts and huge offers just to move their inventory. On the other hand, I think we've mentioned around the route to market being changing. Consumers are now going more online. And what businesses are doing is really, one, to support the existing route to market. So the route to market really is, how does a business get the products to the consumer? It's through the distributors, through the retailers, through the supermarkets. And the businesses now are looking and supporting their existing route to market partners. So they're providing credit, they're giving promotions, they're putting staff there to be able to work with them and assist them. On the other hand, the businesses are also having to adapt to e-commerce. You've seen the growth of Jumia phenomenally during this period. A lot of deliveries being done. Uber Eats, just to make sure that you're meeting the last mile. So also businesses are looking at it and saying, we now need to invest in technology, and the immediate technology is let's upskill or make our websites to be more adaptive. And being more adaptive, then consumers are able to buy from the website, then the business now makes the decision. How do we then deliver to the consumer? Do we do third-party delivery? Do we hire motorcycle riders out there to deliver, or do we even go out and deliver ourselves? So these are some of the changes that we are seeing businesses and how they are adapting to the new, call it the new normal. And we've also mentioned around the price. Businesses have had to very quickly look at their product portfolio. And when they look at the product portfolio, so as to be able to look at it and say, are we meeting every segment? There's been obviously a shift. The incomes have been reduced, and therefore we are seeing consumers preferring to buy value rather than premium. So you've got to really make sure that even as a business, you're being able to provide a wide array of products, just so that then you're able to meet each of the various price points. And the other one is obviously reducing price. So the key for demand is really saying, what is our goal? Just to make sure that the demand that is there, we convert it to a sale, convert it to revenue, and also more importantly, convert that revenue to cash. As you're doing all these items, you still have an impact and thinking very hard about the decisions we are making now. How do they impact the future? When demand picks up, we should be able to meet that. And I think there is no better place for that to actually for us to ask our questions around it, like in supply chain, which is basically manufacturing, logistics, and distribution. As you would expect, with the current situation, immediately it came in. All the businesses just pulled out their business continuity plans, and immediately they pulled them out. They then started making moves to adapt to the current situation. But then the business continuity plans we had, I'd say, not that they were overtaken by time, but we want to say that they needed a very quick review, and that's what we've seen. So you've seen businesses very quickly reviewing the business continuity plans and adapting to the current situation. So businesses have had to do local sourcing, looking for alternative suppliers. You now can't import from China. You've got to look at locally who's able to provide us with the raw material. And we've seen businesses working with local suppliers now, especially to address the issue of quality and price point. So as you're having a discussion with the local supplier whom you may not have been buying from, then the key thing is that are they able to meet for you the quality that you want and at the price point that you were previously getting. And we have seen also businesses, as they look at their supply chain, as the disruption in the supply chain has happened, businesses have had to relook internally at their processes, where are their assets, where the locations businesses have, especially the manufacturing ones. Are we manufacturing in Mombasa and Nairobi? What does that mean for us? And look at it and then say, yes, demand has come down, but we need to be efficient and we need to also be able to meet the customer needs, but also at at an optimum cost. And so having seen a lot of what the businesses are doing is also asking themselves around cost optimization. I like saying cost optimization is not cost cutting. Cost optimization is making the best decision around a cost, having taken into account quite a number of things. I think cost cutting, most times when we think about it, is just cutting the cost and saying, yeah, stop doing that, so let's move on. But I think when we look at it from that point, then you'll find businesses will cut costs. Those costs will impact their businesses now, and not only impact now, but when the demand picks up, it becomes very clear that the business is not able to meet demand at that time. I mean, they don't come out being very competitive. So overhead cost reviews, fixed cost reviews, how are we running our production runs? Previously, we had 3 production runs. Now you must have 2 because obviously the lockdown. So a lot of things happening in that side. So we're saying for supply chain is around demand planning, making sure there's a constant feedback loop, and nobody is going to help us better to get a grip around supply chain than the people who are working in supply chain now. It is your production supervisor, it is your logistics coordinator, your logistics manager. We've got to hear them, let them give us the ideas, then we look at them, then refine them, go quickly to market, execute very quickly, review what the impact has been, and then very quickly then come back. So the feedback loop then has to keep operating. I think a big thing that's happening now is a question around CapEx and investment. So businesses have to very quickly look at what's happening to our investments. Do we need to invest in CapEx now? Business was probably planning on investing in CapEx for growth. Then you've got to now double click on the assumptions for growth. But also investment now is also being very heavily driven by safety. Is the investment we want to make regarding safety, and also what are the operational enhancements we need to make so that then we can optimize on cost. So that's quite big. I think I'll spend just a bit of time around cash. This has been one of the big areas where businesses have had to very, very quickly pivot and understand how to deal with it. So for cash, it's more around a cash mindset. It's across the business, from the CEO, the CFO, and the two of them have to make sure they communicate across the business that the key thing is for us to conserve cash and make sure that we increase our cash runway, that we're able to survive with cash for a longer period of time. So what are businesses doing? They're having to look at the risk versus the opportunity, having to very quickly look at justifying all the expenses. Do we need to incur? Do we need to cancel it? Businesses have had to go back to zero-based budgeting and say, look, yes, I had a budget, I don't have to spend. So if for business to spend, they really have to ask the question, is it a good thing to have, or is it a must have, or is it a need to have? And most likely businesses are ending up saying, we are only doing what we must do right now. The other key thing is really to have an executive cash committee at the senior level of the business, where you're reviewing the cash focus, looking every day at what are we holding in cash and who needs to be paid, and saying, today we are paying A, B, C, D, tomorrow we'll pay X, Y, Z. But just looking at that, and the aim here is to prioritize, to make sure that we're also revising our focus and we're getting in line. On the bank facilities, we said the bankers are very critical to business because they're the ones providing a lot of funding to businesses. So you've got to look at your bank facilities and say, are we in breach of covenants? Number one, if we are in breach of covenants, then we need to ask the banks for waivers. How are our bank facilities structured? Are we able to draw down? Do we have room on our overdraft to be able to draw down? How much did we have in import financing and the goods haven't yet arrived because of the delays? How do we restructure that? So it's really looking and working with our banks and making sure that we are making the bank our partner, just so that we also, in as much as, yes, a lot of businesses are getting into default, but you're getting the waivers and you're also working with your bank to make sure that you're continuing to operate. From a working capital management perspective, businesses are having to now work a lot. Focusing on cash means that the key here is to reduce or improve your cash conversion cycle. And you improve the cash conversion by making sure you're doing a lot of cash sales. If you're giving credit, it's not for a very long period. You're giving cash discounts. You're doing factoring of receivables to improve how much cash we're getting into the business. We are being effective on our payables. So obviously we are queuing. And on the payables, you also got to look at it and say, of our suppliers, who are the small suppliers? Are we able to pay a lot of our small suppliers so that then we also keep our economy going? And then we are left to discuss and deal with the bigger suppliers who we are able to have discussions with and who are also key to our business. We also have to look at it and say that procurement has to ensure that we're not holding a lot of stocks, that we are having just in time and holding just enough stock to help us meet demand. So negotiate with our suppliers, term out payments, get discounts. So those are some of the things that we are seeing, especially also around inventory, on how businesses are operating with inventories, saying, look, let's give offers so that we don't end up with expiries. Let's minimize our expense cost on that. Let's make sure we don't have write-offs. Let's make sure we are also producing what the consumer is asking for at this point. So that's what we are seeing as a business. And as we look at it, another key thing for all businesses really is just to communicate, continuous communication, keeping everybody abreast. We may not have all the answers. We may not have everything that answer all the questions that the various stakeholders are looking for, but let's communicate. With our employees, let's make sure we take their safety as important. Let's provide them with a conducive work environment. If they're working from home, let's watch out on the hours that they're working. Again, look at wellness. Our suppliers, as we've said, let's keep the relationships going. Let's talk to our bankers. I think the key thing also here, just to mention, is around regulators. A lot of laws are changing. So let's lobby to make sure that the laws that are coming in, we are also able to impact them. We've seen a good job being done by KEPSA, by CAM, in terms of the constant communication and discussion with government. So as they can just look at it and make sure that we're also impacting the decisions being made, are impacting livelihoods. So we have to make sure that we mitigate also on those investment decisions not being too negative. On the other hand, we also have to keep our investors abreast. You have to keep, if you're a listed entity, obviously the stock markets are looking at how you're communicating and what you're doing. It's very important to keep the owners of the business abreast, and what they are looking at is really to know visibly, what are you doing now, what are you doing into the future, and what's the visibility you're doing. So I think for me, looking at it and what we've seen, and I think for us and the team, those are just the key areas we just wanted to share with you. And I think the key thing is also that we spend more time on Q&A so that then we can interact more. Over to you, Fred. Thank you.
Wambua, thank you very much for that presentation. Thank you for sharing your insights on consumer-facing businesses. I think there's quite a bit of material to pick up from what you shared in the presentation. Just before we go to Q&A, I think I will ask Thomas. Thomas, you've been in consumer-facing businesses for a long time. You've been in the retail sector. You've also been involved in transporting people in the air. I think it will also be good to hear your views on what's happening to those businesses and how do you think they're responding to COVID-19. Thomas, you may need to unmute your microphone.
Yeah, thank you very much, Fred, and thanks for ambushing me about those specific businesses. So maybe let me start with the airline. My perspective, I've been out of the industry for about 2 years or thereabouts. So my thinking around airline, for example, is that obviously demand has tampered. Going forward, I think the demand will be just about 25% for passenger business. And that obviously has an implication on revenues for airlines, because quite a number of airlines, traditional airlines, make money from passenger business. However, there is opportunity in the cargo business. You most probably will know that a lot of cargo actually is carried in the belly. It's not so much carried by freighters. And what has happened because of passenger business collapsing, there's been a lot of demand for additional capacity from the freighters, which they are not able to meet because the aircraft are fairly expensive assets. And therefore, actually, the price per kilo for cargo has gone up from a low of 90 US cents per kilo to as high as $20 US per kilo. And that obviously gives an opportunity to those airlines that are agile, who are actually able to convert the cabin, the passenger cabin, to be able to carry cargo. So therein lies an opportunity. But overall, there is an estimation by IATA that in this financial year, just African airlines are going to lose to the tune of about $6 billion in terms of revenue. So that is a huge impact. And even when travel restrictions are going to be eased, obviously people are still going to be a bit risk averse in going inside an aircraft. So there's still going to be a huge impact. So as much as the capacity will be available, the airlines will be ready to go back to business, the airports will open up, I think we are still not going to see the same level of demand that we had before the COVID thing came up. So I think that would be my view as far as the airline business is concerned. Insofar as retail is concerned, I know a lot of people might think that the supermarkets, for example, and there are quite a number of them in Kenya, are doing very well. My sense is that that might not be necessarily true because of a couple of things. The first one, obviously, is there is a restriction in the times of opening. You know that because of the curfew, the employees have to be let go early, and obviously people cannot shop beyond a certain time because some of the products that you go to buy in the supermarket are not necessarily considered as essential. That's one. The second thing is just the number of people who can go into the supermarket at a particular time. I mean, if you've gone to Carrefour or a few places, you've seen some cycles which demarcate the distance that you have to stand between yourself and the next consumer, and that obviously restricts the number of people who can go into the supermarket. The third thing is just the thing that Wambua talked about. The consumers are pretty much now focused on just buying essentials. So the volume of trade or business that supermarkets used to have a couple of weeks or months ago obviously will go down. And then the other thing is just the concern of safety for employees. And as much as, yes, I hear what Wambua is saying about merchandising that consumers, or rather manufacturers, may want to increase, there's obviously a challenge in terms of employees. So I think for me, those are some of the things that I see. But also, finally, Fred, it's just the issue around the supply chain itself, because the suppliers that are actually supplying the supermarket are within this same ecosystem. And because of the issues that they have, they may be producing not only one line of product, but they may be producing a set of products. And some of those products, because of the fact that consumers may not prefer them at this point in time, might actually have very low volumes, and that affects the way those businesses operate. And in turn, those businesses may not be able to offer the credit periods of up to 90 days that they have been according the supermarkets, for example, and that obviously has a ripple effect. So those would be my concerns, or the things that I can put on the table.
Okay, thank you very much, Thomas, for those insights. Yeah, I think quite a bit of changes, and I think also what is expected. Like you're saying, we all expected retailers to be doing quite well, but I think, like you mentioned, it may not necessarily always be the case. We've got a couple of questions that we've received, and I encourage all the participants in the webinar to keep posting questions. You may use the tab on the right-hand side of the screen to post your questions. I think the first question I'll pose to Wambua, on the topic of conserving cash. One is running a business today. What are the areas of my business, the operations in my business that I can quickly change to be able to begin conserving cash? Okay, Wambua, you need to unmute.
Thank you, Fred. I've just taken the presentation back to the slide on cash, and this is very practical. And the question you've asked is I think what very many businesses have grappled with. Some of the quick decisions the businesses need to do is very quickly just have that small committee at a senior level, which is looking at the cash flow of the business. But it is not just looking at the cash flow of the business and the cash. It's also looking at prioritizing payments and being able to communicate with everybody in terms of this is what we can pay, and also looking at it and saying, are the payments that we need to make impacting us in terms of safety, enabling us to meet consumer demand. So what are they doing? So one is review payments. Two, we're seeing businesses very quickly cutting off on non-essential heavy investments. For example, if they were busy looking at capex, they were going to invest in increasing production, in buying, increasing their fleets. So they're cutting down on that on that capex. I think the other key thing is really just also talking with the banks and making sure that you have available funding from the banks, just to make sure that you have money. But I think the key thing here is you've got to have that committee right there, which has quite a number of senior people who are looking at all this. As all these decisions are being made, they're impacting the business now and into the future. And we need to make sure we're seeing for the businesses that they must go through it, but they must just be very clear around it to make sure you also don't impact the business negatively. Yeah. Thank you, Fred.
Thanks, Wambua. Thomas, I'll pose two questions to you related. We've spoken a lot about conserving cash, but maybe you have a business owner, management who are looking at new areas for growth. How do I increase demand for my products? So the question to you is, number one, what can a business do to increase demand for its products? And of course, in the attempt to conserve cash, how does one create that demand? And related to it, then, if a business is looking for a new growth area, is pursuing, wants to have a new growth plan, and is looking to build a new route to market, how would it go about it? And again, looking at the need to conserve cash at the same time.
Thanks, Fred. That's a lot of questions. I'll give it an attempt. I think part of the answers have been given by Wambua, so I'll be very brief on this. I think for me, it really depends on which products are consumers at the moment preferring. I think Wambua did allude to the fact that people are looking at availability. and the people are looking at value as opposed to premium. And I think when you look at value, we're talking about products that are essential but have the basic attributes. So people are not necessarily going to buy a premium product, a premium type of cooking fat, for example, if there's such a thing, or a premium type of cooking flour. But they're going to buy a cooking flour which has the basic attributes. So that's the first thing. Then the second thing that you have to ask yourself is, what is the channel that is preferred? And I think the channel that is preferred at this point in time, it depends on where the particular customer is located. For those people who normally, for example, drive to the supermarket, or those who have transport and can be able to access the supermarket, most probably they might opt not to necessarily drive to the supermarket if the product they are buying is a value product and has a basic attribute, and therefore they don't need to go into the supermarket or a shop to do a personal selection. So for such people, then they might opt to use the digital platform. And I think Wambo already talked about what Jumia and Twiga, what Globo and various other supermarkets and outlets are doing. So I think to answer your question, I think as a business, you then need to ask yourself, what are the things that people are looking for at this point in time? Which products are they looking for? Because again of the issues around cash conservation. And what is the easiest channel, depending on which category of customers you have. So my take, for example, would be, if I'm trying to conserve cash, and there could be other ways to do it depending on the consumer segment you're addressing, I would most probably look for an e-commerce platform. So I'll go digital. And I know, again, Fred, you're going to say, but Thomas, I said you should be conserving cash, and therefore you might need servers and all this. So you have two options. You can either actually have do what we call white labeling. So you get a digital platform which is already up and running, and they can do white labeling on, for you. So they can put your name and logo and everything, but you use their servers to have your own product. Or you can develop your own platform and host it. So you can host it in Amazon, AWS, or any other particular platform at a rate which is subscription based. So based on the number of transactions, so that you're able to match the revenue versus vis-a-vis the cost. So it's pretty much a revenue driven cost. Now, of course, some of the other things that you could then do, as Wambo already alluded to, is to see whether you can have, because of what you have done in terms of your supply chain to reduce some of the things that you would otherwise do, is to look at how you can have a price which is favorable. So as you're able to move volumes. So from the onset, instead of setting up a price and then doing promotions, you could just have a favorable price which actually encourages consumers to buy online. Like you've seen, for example, in Jumia, they have a lot of discounts, and these discounts you can work with partners where you bundle products that go together. Like if, for example, you're selling a washing machine, if a consumer feels that is an essential part of things today, because you don't have those men and women who come to your house to wash, and you need to wash, then you may need to work with the people who are manufacturing detergents, so that you move the two products together. So that is one of the things that you can do. The other thing is you can also work with Jumia, for example, to manage the last mile, or you work with Glovo to manage the last mile, to avoid a scenario where you have your own logistics. Again, you have to do this within the gamut or the remit of what Wambua was talking about. But I think what you need to think about is what really are consumers consuming at this point in time. Again, it's more around value than premium, and it's also around availability. Because if I'm ordering, for example, a bale of unga, or if I'm ordering 2 packets of unga, it most probably means I need it. If I'm ordering in the morning, I need it for lunch, or I need it for dinner. So your last mile has to be very robust. And I might be ordering only 2 pieces because, again, I'm conserving cash. I don't know whether that answers the question, Fred.
No, thanks, Thomas, for that. It does answer the question. There are two next set of questions which I'll address to Thomas and Wambua. And to give you time to prepare, first let me go to Thomas. Still in the area of conserving cash and employees, what is your view on furloughs, where employers are having to let go of people on technically unpaid leave? Is this an option that companies should be considering? as a way of reducing the cash impact. As you're thinking of that, the question to Wambua, of the consumer-facing businesses that we see today, are there some which you see not surviving or being substantially changed by this crisis? Are there some businesses which you see, goods and services, which you think might be rendered obsolete from this impact of the COVID-19 and may never resurrect? And do you see new consumer-facing businesses emerging? As you point on that, Wambua, I think over to you, Thomas, on the question around furloughs.
Yeah, Fred, thank you very much. You know, furloughing employees is a very common thing, especially in the airline industry, because especially in the US, where several airlines used to furlough out employees to the Middle East when they had issues, like when they had Chapter 11 issues. Now, and the answer to your question is yes. I think it's something that employers need to consider. Of course, within the remits of the law, what the law allows, it's a much better option than declaring employees redundant. And the reason why I say this is because in certain industries or certain sectors, employees have very specialized skills. And the challenge with letting employees go and they go into other things with no possibility of them coming is then when things go back to normalcy, then you incur a lot of costs to retrain the employees. That's the first thing. The second thing is just pure loyalty. I think if you have an organization, for example, which has had employees for many years, 5, 10, 15 years, I think it's only fair to reward some loyalty, because those are employees who have been loyal, they provided value over a period of time, and therefore it's only fair to be able to, you know, to give them the first opportunity when things get back to normal. The other thing is just intellectual property, the knowledge that the employees have, because you also don't want to let people go out there with your what we call organizational assets or the knowledge that the employees have. So I think, in my view, that is something that employees really need to consider going forward. Yeah. Fred?
Okay, so I'll.
Thank you, Wambua. Over to you.
Okay, thank you, Fred. So, are there businesses that will not survive or may go obsolete during this period? I think that at the core of that question really is the question of, is the product or service that we are providing as a business, is there a need for it? And I think that's where you start. If there's a need for the product, then the next question really, and I think which is the way this question most likely is, if there's a need, if the business is not able to provide that product to the consumer who requires it, then another business will come up which will provide it. So I think the real question is, will there be businesses that survive or some which won't survive? Yes, there are a lot of businesses that may not survive, and this is really exposed because of if they don't manage their cash properly and those kind of things. But I think also something to go back to is to say, the decisions businesses are making now, and that was really the core of this presentation, is that yes, these are the decisions businesses making around demand, how to avail the products, how to do promotions. These are the decisions the business is making around the supply chain, around how it's managing. Each of these decisions is going to impact the business in the future. It's going to impact how the business comes out when things get better. How it will come out, will it be, when demand picks up, will the business be competitive? So I think that's just a roundabout way of answering the question. I don't think it's more about businesses. There are those obviously that will survive. I mean, there are those that will thrive. Medical businesses, as we are seeing, online businesses, technology-based platforms, that will thrive, obviously. But there are businesses which, I mean, products. I'd say products which may disappear. And for example, right now, I mean, no, tourism has gone down. It doesn't mean that the impact that we've seen on tourism won't pick up in terms of positively later on, but obviously it will change. It's an industry that will change. Airline travel will change. So I think that's what I have to say around that. And it's more looking at it, a business, the product, meeting the core requirement of the consumer and the businesses themselves surviving. Yeah. Thank you, Fred.
Okay, thank you very much, Wambu and Thomas, for those questions. We have quite a number of other questions, but because of time, I think we may not necessarily address them on this forum, but we should still be able to get back to all the participants with our views on some of the questions that have been posed. And we are very happy to, of course, keep the conversation going. Feel free to reach out to us, even as we come back to you on some of the questions that have been raised. So I think what we'll now do is just come to a closing. And what I would like to do is just maybe pick out some of the key messages that have come through from this session. I think what has been clear is that the key focus during this COVID-19 period is really around liquidity and working capital management. I think that's what every business has got to be focused on at the moment. And for sure, I think it's Jack Ma who said that the key target for 2020 is just to survive, to remain alive. And that would really be considered a success. Businesses need to be thinking about coming up with a more efficient and resilient supply chain. We know there's challenges in logistics, particularly if you are importing raw materials. Then it is important then that you look at building a very resilient supply chain. I think the view that we have formed internally is that we might be dealing with the public health issue for at least another 12 months. So it's good to be cognizant of that kind of timeline, or whichever other timeline that you consider appropriate, and make the appropriate plans for building a resilient supply chain. I think also not to be overemphasized is even as businesses target conserving cash, it doesn't mean destroying relationships with the customers, with suppliers. One must keep their ecosystem alive, must keep their relationships strong, because those are relationships that businesses will continue to need. So it's not about stopping paying suppliers, bankers, or failing customers. It's really about how you prioritize your payments as you manage liquidity during this season. I think it's also important to have a very clear set of different scenarios as one is planning for the different businesses, to just think of what are the different scenarios that could play out. And what I think is often ignored is also looking at what is the worst possible set of things that could go wrong, and then planning for your business accordingly. Just to ensure that you have a robust plan that is able to deal with the different issues that may come up. So with that, I think I would like to close the session today. I wish to thank you all very much for attending the session. Thank you to the panelists, Thomas and Wambua, for your input. Thank you to all who participated for all your questions. And like I said, we'll try and get back to all the participants with all the questions. So thank you very much, and I'd like to close the session there. Thank you.